Following Tesla's new cost cut, there have been a ton of assumptions for the vehicle organization this year. A few commentators see Tesla recording colossal interest for all quarters of the year, and some even foresee the automaker could create upwards of 2 mediocre vehicles this year. Yet, the inquiry remains, might Tesla at any point perhaps produce up to 2 million vehicles in 2023? We should see. Yet before we get moving, remember to watch until the end so you don't pass up all the extraordinary substance in this video. Hello folks, invite back to Tesla tomorrow. Tesla is taking steps toward turning into the most important vehicle organization on the planet, yet this will require some investment, exertion, and execution in the entirety of its current and new plants, as well as energy stockpiling and FSD. The vehicle organization makes electric vehicles, and these get some margin to increase and deliver. Tesla marginally beat Money Road's objective for final quarter income and benefit for 2022, regardless of a sharp decrease in vehicle net revenues, and it looked to console financial backers that it can reduce expenses to adapt to the downturn, even as rivalry heightens in the year ahead. Tesla's profound cost cuts in December and January have situated the automaker as the initiator of a cost wall anyway. Its estimate of a 37% rise in vehicle volume for the year to 1.8 million vehicles is down from its speed in 2022. 2 million deliveries are estimated by several Tesla investors for 2023. What's more, this is to a great extent because of the way that Elon Musk said on the income call that 2 million was conceivable on the off chance that nothing truly turns out badly. That implies no significant conflicts, disasters, or financial breakdown, so exactly the way in which conceivable is 2 million vehicle conveyances, and what might it take for Tesla to accomplish that achievement? More subtleties in this video. Yet before we get rolling, in the event that you like this kind of happy, remember to raise a ruckus around town button, buy in, and turn on notices to push state-of-the-art on all that along on where's Tesla in its 2022 Q4 profit report. Tesla said it hopes to convey 1.8 million vehicles in 2023, up 500,000 vehicles from a year earlier and mirroring an increment around 40% anyway. Musk, who has missed his own aggressive deals focuses for Tesla lately, said 2023 conveyances could hit 2 million vehicles without outside disturbance. As per Musk, on the off chance that there are no unanticipated conditions this year, it very well may have the option to convey more cars. He expressed this during the organization's Q4 2022 income call, expressing that the inward creation limit of Tesla's processing plants is more like 2 million vehicles. Musk resolved this issue toward the beginning of a call with financial backers and examination, expressing that Tesla's cost changes truly impact the typical purchaser. He additionally added that vehicle orders were generally twofold in January, prompting the automaker to make little cost increments for the Model Y SUV. Despite the fact that I'm musing that he expects a troublesome downturn this year, he actually accepts that the interest for Tesla vehicles is great in spite of compression in the auto market. All in all, how might 2 million vehicle creation affect Tesla? Continues to watch to figure out that in 2022 Tesla conveyed 1.31 million vehicles, and in the event that the automaker hits 2 million vehicles this year, there will be a net rate increment of 53%, which doesn't appear to be excessively outrageous as financial backers have generally expected a 50-year development for Tesla. By assessing the ongoing limits of all Tesla processing plants, we observe that creation is approximately 250,000 a quarter for Shanghai and 150,000 for Fremont, or around 1.6 million. Annualized, thus arriving at 2 million creation for the year. Tesla needs an extra 400,000 vehicles from its new industrial facilities in Berlin and Texas. If these organizations are at a run pace of 3,500 vehicles 7 days a week as of now, then, at that point, that is 360,000 per year from them by adding that to 1.6 million vehicles from different processing plants. Tesla will as of now be at 1.96 million vehicles, so we could say that Musk's forecast of 1.8 million vehicles for the year is not exactly the ongoing run rates. There are around 250,000 model year vehicles a year out of Fremont, which would consume around 20 GWh of 2170 cells. This leaves 15 GWh of 2170 cells that can be utilized in Tesla's Gigafactory in Texas, which would approach around 180,000 model year vehicles a year from Texas, which is around 3,500 per week. 4680 battery progress can deliver 1000 Model I vehicles 7 days a week. This would mean an extra 50,000 a year, taking the creation number from 1.96 million to 2.01 million for the year. And that is essentially the all-out style limit Tesla, as of now, has and is about to reach in Giga Berlin and Giga Texas. Tesla deal possibilities are key. Concentration for financial backers, and the organization said it keeps a drawn-out focus of an accumulated 50 yearly ascent in deals, and we accept this has directed most of its creation plans for the year. The vehicle organization referred to that it will unveil plans for a cutting-edge vehicle stage at its financial backer day in spring, as per Edmunds' chief overseer of Bits of Knowledge, Jessica Caldwell. Tesla's vehicles are all in need of refreshes. In past programming, she expressed that Tesla will generally rely upon the less expensive unit as well as Model 3 and Model Y to carry EVs to the majority. Albeit this ought not be an over-the-top errand for Tesla that could be conceivable unexpected deterrents lately. Tesla has over and again experienced various issues in the worldwide setting which adversely affect its improvement in 2020. The pandemic impacted the whole economy of setting creation in many enterprises. The results of this spooky the economy for a long time until makers and different organizations had the option to adjust to new real factors and re-establish their exercises in like manner in 2022, while the impacts of coronavirus is fundamentally the Russian-Ukraine emergency impacted the worldwide economy with an adverse consequence on Tesla too. The macroeconomic climate in the U.S. was additionally managed the weighty blow adversely affecting the improvement of the organization. There are so many things that Tesla might potentially accomplish this year, yet this isn't completely up to the automaker. Tesla said that it doesn't expect significant close-term volume development from China since its Shanghai industrial facility was running close to full capacity and bouncing back from creation challenges. Recently, Sophie Lon Yates, an expert at Hargreaves Lansdown, likewise noticed that even a little cooling of interest will have huge ramifications for the vehicle organization. Tesla is depending on more seasoned items, and Musk has said its digital truck wouldn't start volume creation until the following year. As per past reports, the profoundly expected model wouldn't be delivered in volume until recently. Additionally, cost codes might influence Tesla's edges. Before very long, the automaker expressed that his auto net revenues, which dropped to a two-year low of 25.9% in the revealed quarter, would be over 20% compelled by expenses of sloping up battery creation and new production lines in Berlin and Texas, as well as higher unrefined substance items. Coordinated operations and guarantee costs, by and large, are supposed to be under additional strain from their forceful costs cuts. Tesla had made a progression of cost increments since mid-2021. Yet as of late, opposite calls and limits were offered in December in the U.S., followed by value cuts of however much as 20 in January. These value cuts appear to have caused fears for financial backers, but there are a few motivations to remain hopeful regardless of such outrageous value cuts of about a normal of 20 across all markets. Tesla is not yet ready to create great net edges. Experts had said Tesla's productivity gave it space to reduce costs and tension. Opponents mean the organization's $9,000 in net benefit per vehicle in the past quarter was in excess of multiple times the equivalent figure for Toyota in the second from last quarter of 2022. Fortunately, net edges are not even the main edges. Everything unquestionably revolves around the working edge, and the contrast between net edge and working edge is the working cost that Tesla causes. Tesla has made a mind-blowing showing in getting their working costs as low as they very well might be, and this worth doesn't appear to increment, especially as Tesla's creation increments as Tesla builds. Supply, there is a need to decrease costs to get new interest for the unexpected stockpile, and since working expense stays a moderately fixed cost, this implies that the OPEX per vehicle is diminishing each time too. In 2022, Tesla had its OPEX at $7.2 billion, with 1.31 million vehicles conveyed. This winds up at around $5,500 of working costs per vehicle, assuming our PDX continued as before for 2023 and Tesla heads 2 million vehicles, then the working costs per vehicle could lessen to 3,600, albeit this would expand a cycle anyway, regardless of whether OPEX was $8 billion for the year. That lessens to $4,000 for every vehicle, which is a decrease of $1,500 for every vehicle, and all extra working benefits. Tesla has serious areas of strength for a benefit with regards to estimating. This is one significant working influence for the automaker, and as Tesla keeps on sloping, the influence increments with it, albeit 2 million conveyances for a year. It's no joking matter. When Tesla begins getting up into the various millions, then the working costs per vehicle will begin to essentially diminish, passing on more space for additional vehicles to be delivered. How about Tesla really do 2 million vehicles this year? Let us in on down underneath, and remember to let us know your valuation of Tesla. And to know more about what Tesla's been doing over the most recent couple of days, feel free to tap on this next video on your screen. See you there.